Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 5th. My name is Eric Wilkinson. Yes, you may recognize me as the Wolfman from some mainstream media outlets, but I'm here to teach you some different option strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data to see what's going on over in the markets. All right, across the pond, we've got German factory orders coming in at negative 2.2%, expected to be basically unchanged, so a big miss there. Not a good thing. Then we move over here to the United States. Remember, it's Unenjoyment Friday, which is non-farm payroll. It's the most important economic data point we get throughout the year or throughout the month. So that is giving us the best indication as to the health of the overall economy for the most part. I'd almost lean towards ISM being the most important, but this one's still a very important economic data point. We got average hourly earnings come in at 0.2%, expected to be 0.3%, so slightly lower than expected there. No wage inflation, obviously, although last month's number was revised up from 0.2% to 0.3%, so kind of making that headline number a bit of a wash. Then we've got non-farm payroll employment change coming in at 224,000 hires, expected to be 162,000 hires. No revisions to last month's numbers, but a big beat on this headline number. Unemployment rate did uptick to 3.7% from 3.6%. I think a lot of that has to do with probably people are looking for jobs coming off of that unemployment line and now back in the job force as a statistic here. So that's what happens when we start seeing a lot of people getting hired, as more people that were on the sidelines come into the job market looking for a job. They're called discouraged workers is what that is. All right, so good economic data. Well, how does that translate over to the overall markets? We've got crude oil just slightly in negative territory. I don't think the economic data points that we got today are really going to affect crude oil. It's not really going to show any kind of demand or anything like that, but we are seeing that the job market is looking pretty good. So that will overall be an overall arching theme with the equities. And that affecting gold futures back below 1400. We've been talking about that. That was a big psychological level that the bulls were really trying to defend and had done a very good job of doing that recently. As you can see, we've basically been defending that 1400 for several days now, just peeling below that. But you know, right here, we've talked about this line right here in the sand. You know, that line is acting as support and resistance. We haven't seen any lines for Fibonacci or anything like that, but you can see that that 1388 is really going to act as a support and resistance. I probably should just throw in some kind of line there to indicate that there is something there. But right now we are back below 1400. I am expecting the market to start to look to roll over and cover this gap here. We've talked about that with this gap. We're looking to have the market come down and trade through that. So I'm still short GDXJ. I'm right there at the money. I'm short the 34 calls, and GDXJ is trading right around 34. So looking for this market to move down. I was going to add in some GLD shorts, but looks like we already got that move. I'm going to need to wait for some kind of bounce before I start adding something in GLD now. All right, bonds down 2 points on the day. Actually, you know, a point and 28 ticks, but 32 ticks is another full point. So we're only a few ticks shy of down 2 points on the day. This is a product of a good unemployment number. The unemployment number is showing that the economy is doing well. You can't have a rate cut when the economy is doing well. We haven't seen any signs of recession necessarily here in the United States. We've talked about it with the ISM manufacturing numbers. Now we're seeing the unemployment numbers. We're seeing some wage strength and some of the other economic data. We didn't really see that today, but we're seeing some good economic data here in the United States. Across the pond is a different story. They are starting to see some weakness and some recessionary signs, but that hasn't affected us here in the United States. So we need to really worry about us in the United States before we start moving around interest rates. We aren't changing our interest rates for the global economy. We're trying to change interest rates for our economy. Now, if our economy is doing good, there's no inflation, talked about this. The Fed has got to leave interest rates pretty much unchanged now because there's no inflation. The economy is doing pretty good. So they're stuck between a rock and a hard place right now that they can't really raise rates, lower rates, or do anything. So they're going to leave them unchanged. And I've talked about this almost till I'm blue in the face. So I'm still expecting the bonds to continue to roll over. I think it's way overdone to the upside. I do not see the Fed lowering interest rates this year, at least with the economic data points we've got right now. All right, VIX back up into the teens again. We're happy about that, right? Up 1.5 points, 1389, almost 1400, but a big spike because we were getting that sell-off on the unemployment numbers there. So the market was starting to roll over, especially on the knee-jerk reaction of that economic data point. We fell out of bed. Now you can see the Dow Jones Industrial Average making up a lot of that ground back. We're only down 126 points right now on the day, and we were down another 100 points on that. So we were down almost 230 points earlier today off the open. Now you can see with the NASDAQ, we are down about 60 points, well off its lows of the day. As you can see here, we were another 30 points down. So the NASDAQ was almost down 100 points earlier on today. I actually thought we were going to go down and test this Fibonacci on the 7764 lines up there. It looks like we were coming down to test that. We've got an engulfing bearish pattern right here. We engulfed Wednesday's move to the upside, making that all-time historical high. But one thing to note here is we are seeing, if you can see the high here is 790975. We take that overnight session out and you can see that we did not print that high during the day session. So we are 3 ticks shy of the overnight highs. That's going to need to be printed. Remember, we've talked about this again. They print those overnight highs. The day session is going to want to print that at some point. But we found that there is resistance up here at 78.81-ish, or even as soon as we approach that 79 even area. That was a lot of resistance, as you can see, all the way back to when we were back in May, right in this area, that whole area when we were coming up against that resistance. We're seeing that find a resistance right there again. But I'm expecting us to, because we've gotten a little overextended, come back down to reality here. The economy is doing well, but the global economies are not doing so well across the pond. All right, again, E-mini S&Ps, if we finish near the lows, we have another engulfing pattern. But like I said with the NASDAQ, we are seeing this market have overnight highs that were not printed so far in the day session. So the market is going to be having that in mind going forward, that we are going to need to print that. You can see that happen today. We got that print overnight. At 3006. That's an overnight. We'll see that show up in the other charts here. Might as well get to it. You can see overnight we got that 306, and then today we are starting to see the market fall off. Overnight inventory short, no real attempt to get those guys out, and we flushed to the lows as soon as the market opened. Now we're getting a little bit of a bounce. They may look to try and take out some of those, maybe a half back, come and trade to the point of control from Tuesday, and then, or actually that's probably Monday. Actually, no, that is Tuesday. So the market looking to maybe get back to that point of control, which lines up with the value area high. I really think this is kind of bearish. The market's going to kind of do those things the market likes to do, is throw their little tantrum and say, we need a rate cut, or we're going to sell off, kind of thing. So we can see the E-mini S&Ps are coming off there. All right, TLT is the trade that I covered. And if you guys remember, I had on July, there are only about 14 days left. So I've had to ride a lot of my option trades out into this area that I don't really love to trade, because you get a lot of gamma and stuff like that. But when they're losers, that's when I'm going to start playing around with that gamma and taking it in as long as I can to play out those probabilities. Well, it worked out nicely with TLT. And like I said, I was in the July, sold the 134 calls in there because I was expecting this to act as a lot of resistance. We saw that in the bonds. I also talked about that the market was overdone to the upside. I didn't think that the Fed was going to be cutting interest rates or any of that. You know, a lot of there's a bit of a balancing act there with China. I agree, but at the end of the day, our economy is doing well enough that it should not necessarily necessitate a rate cut at this point. We're just not really slowing down. We are expanding, but not, you know, a robust economy. But that doesn't mean we need to cut interest rates, all right, to spur inflation or any of that stuff. We just need to kind of let these rates meld and let people get used to them is really what it comes down to. Anyway, I sold those 134 calls in there for $1.02. I was able to buy them back for 36 cents today. Obviously, it was a loser yesterday on Friday. On Wednesday. Today's Friday. We got the unenjoyment, Eric, but on Wednesday that was a big loser. Today we got that nice move. Probabilities playing out, and I'm out of that. A couple of other trades that I am looking to get out of. They're still losers, but I'm just going to keep an eye on them. I am directionally bearish on the equities and looking for that move and in gold. So if we can continue to see some of those things work out, that will be great for my portfolio. That's all I got. Other than I hope you guys had a great 4th of July, and if you can't take that, take it easy. Have a great weekend, y'all.